So could you please help me understand why you've given into all these reckless dark desires?
Give us your broad macro view as to what's driving gold and why it's at these levels and why you think it's going higher.
Right, okay, well, first off, I've got to sort of call out there that it reaches 2,000 next year and a half. And it's not really the gold price that's going up, it's the debasement of currencies. And, you know, an ounce of gold today will buy you a suit. 100 years ago would have bought you a suit, and 2,000 years ago would have bought you a toga and belt. So really it's paper currency that's going down, and the most recent shot out there has been QE2, the launch by the Federal Reserve to buy another $600 billion of their bonds, which basically is printing money.
So it's debasement of currencies, primarily the U.S. dollar, but also the euro and other currencies as well?
Absolutely. We are seeing countries around the world, including even China, who probably is in the best economic situation of everybody, running a nice big surplus. But having said that, they want to keep competitive. They want to keep on selling and exporting to other countries. So they are continuing to print at the same rate and have pegged themselves to that U.S. debasement.
Now, did you find it interesting today that the U.S. dollar actually moved a little bit higher today, and yet gold still went up? Usually the relationship is opposite of that. Yeah,
I think it's very positive when you can actually see gold rally at the same time as the U.S. dollar. I think the fundamentals are very strong and positive for gold. And, you know, short term, there are sometimes supply and demand fluctuations that may impact somebody to sell the U.S. dollar, and at the same time, somebody else may be buying gold. So, you know, on a micro basis, it does happen.
Now, gold's around 1,400 right now. What's a near-term target for you? Because it's not necessarily looking overbought, but do you think investors need to be careful here? Because it is looking maybe a bit frothy, do you think?
I wouldn't call it frothy. I won't call it frothy. But my target earlier on this year, I said, if you look at, there's a trading band, and if you look at the gold price, it's been in that band, and basically that would sort of project gold year-end somewhere between $1,300 at the bottom and $1,500 at the top. And I've been sort of sticking with that in my mind, and so at $1,400, you're right in the middle of that band.
Okay, so let's say it reaches 1,500 at some point before the end of the year. Then it's hard to predict, obviously, but usually there's some sort of a consolidation period, maybe for several months, and sometimes it even drops several $100s before it starts charging again. Do you foresee that?
You know what? I wouldn't be surprised to see a consolidation if it ran up to $1,500 and see it trading sideways. Am I looking for a major pullback? No, but could it happen? Absolutely. But the one thing I keep on seeing is governments around the world continuing to print more money, quantitative easing too. Now, the British, I'm glad to see, have actually in their most recent announcement sort of said they're going to sort of take a breather from quantitative easing, which is a positive. But you know, again, I think what you want to do is continue to watch what governments around the world are doing in terms of quantitative easing.
And what about silver? It usually tends to track gold. In fact, it's underperformed for a long time, and now it's outperforming. But speaking of froth, you got to call that frothy. Silver's kind of frothy.
You know, I can't give you the frothy one. We at the Sprott team really love silver right now. We did just launch a Sprott Physical Silver Trust. And one of the things I want to take people back is a history lesson in time. And if you go back over the last 650 years, in fact, go onto Google and put in 650 years gold-silver ratio, you will see that ratio, which today is around 50 to 1, so 50 ounces of silver is equivalent to the gold price. If you go back over the last 650 years, you will see that on average, that ratio is around 16. Which would argue for silver prices far higher than where they are today. Mm-hmm. And one of the basic reasons for that 16 to 1 ratio is if you look in the Earth's crust, the ratio of silver is about 17 ounces of silver for every 1 ounce of gold. So basically when a miner looked at sort of the rocks there, you know, and if he had a ton of rock, one with an ounce of gold, one with 17 ounces of silver, he had a choice. Do I mine the gold? Do I mine the silver? And at a 17 to 1 ratio on price, it didn't matter. He'd mine either one. But today, if you have a 50 to 1 ratio, which is where we are, you're going to mine the gold all day long because you're going to get much more economic return out of that ton of ore.
That's an interesting history lesson, and that also implies silver has a lot further to run.
Absolutely.
Yeah.